Here we are into our third week of our home buying process. The first week we talked about credit. Last week we talked about the do's and don'ts of home buying. And this week we're going to talk about the down payment process. That's where most people are really, really worried about where will I come up with all this money for down payment. But you'd be surprised, there are so many programs available that we do not know. And that's why our guest today, she will help us to understand those different programs. Ms. Provost, how many programs are available for the down payment process in buying a house?
There are lots of different loan programs out there on the market right now. Which loan program is right for you is going to depend on your personal situation and your goals and how much money you have. So, one huge myth is that you have to have thousands of dollars saved before you can actually be eligible to buy a home or qualify for a mortgage. There are many loan programs out there right now that are kind of catered to and tailored to first-time home buyers, folks that don't have 10 or 20 or $30,000 in the bank. The VHDA, the Virginia Housing Development Authority, they are an amazing organization. They have a first-time home buyer program. They have a couple different options. You can do no down payment at all, or you can do what's called a 1% down payment. With the 1% down payment, the VHDA will actually give you up to 2.5% of a total 3.5% down payment in grant funds. That is free money that you.
Repeat that again.
Yes. So the VHDA, the Virginia Housing Development Authority, they have grant money that they set aside every year. I'm talking hundreds of thousands of dollars in grant money that they will gift to qualified first-time home buyers, and they will pay up to 2.5% of your down payment for you. You're only responsible. The caveat to that, the catch to that, is that you have to have 1% of your own funds. So for a real life example, on a purchase price of $200,000, if you can come up with $2,000 at closing for a down payment, the VHDA will gift you the other 2.5% of a total 3.5% down payment.
Wow. So if you have a of course, good credit.
Yes, 620, the minimum credit score of 620. So not even excellent credit. If you have decent credit and you have minimal bills, so you can't have a whole lot of debt. We want to keep that debt to income ratio at 45% or less. But if you meet those requirements, you have 1%, then you do qualify for that loan program. So you might be saying, okay, well, money is really tight right now, and I don't think I could even come up with 1%. That does not necessarily mean you can't buy a house. There is what's called an FHA plus. So that is a loan program in which you actually finance. It's through the VHDA, it's through the same entity, and you finance the down payment into a second mortgage. So if the down payment is $5,000, you would actually have two mortgages each month, your main mortgage, and a second mortgage in which you pay, typically it's about, I don't know, anywhere between $25 and $50 a month. Same term, same interest rate as your main mortgage, but that allows you to come to the closing table with very, very minimal cash out of pocket.
And what about the zero down payment? Is that still
yes,
a program?
That is definitely still a program that the VHDA offers, but also the USDA. So the U.S. Department of Agriculture, the same folks that actually approve your meats in the grocery store, they have a direct lending program. They have a housing program. So that is for properties that are deemed in a rural area. So in Williamsburg, I'm not sure how familiar listeners are with the area, but anything west of Centerville Road is going to be USDA eligible. Anything in Toano or Lenexa that's kind of considered out in the boonies, if you will, is going to be USDA eligible. Same credit score requirements. If you have a credit score of 620 or higher and your debt to income ratio is 45% or lower and the property is in a USDA eligible area, that is a no down payment program.
So why these programs are not known by people?
I think it's just lack of advertising. Traditionally, these programs were really not made available. We have seen these programs become available in the last 5 to 10 years. Another factor is that not all lenders are VHDA lenders. So not all lenders will be able to offer you a VHDA loan. Obviously, I am a VHDA lender. That's more or less what I specialize in. I would say at least 50, maybe 60% of my business is first-time home buyers going through the VHDA. And they actually have what we call a born-again first-time home buyer. So say you owned a house, you sold it, and you have not had any ownership in real estate property within 3 years, you're considered a first-time home buyer again.
Oh, so if you own the house,
yes,
sold
it, and you did not immediately purchase another home, say whatever the case might be, maybe you rented for 3 years, or we were talking about in the last episode, foreclosure or bankruptcy. So say you sell your house, you're in foreclosure and a bankruptcy, you're taking 3 years to bounce back. After that 3-year period, you would be eligible for a first-time home buyer loan again.
Wow, so even after foreclosure, 3 years space, you considered a first-time home buyer.
There are some caveats. Obviously, you have to take into consideration what type of bankruptcy you had, what type of foreclosure you had.
Yes, okay.
So I would not say that's going to be across the board a unanimous yes, you can be approved within 3 years, but it is possible.
So basically, there are some programs available. And for somebody trying to buy a house, you just have to research it and ask questions.
Right. The 3 most popular no down payment programs are going to be the VHDA, Virginia Housing Development Authority, the USDA, U.S. Department of Agriculture, and the VA, which most veterans are going to be aware of the VA home benefits. That is an outstanding program that's no down payment, and they offer to anyone who has served in the military.
Wow. So other veterans people who are still renting out there, can let them qualify for that, or they have to have a good credit as well?
The minimum credit score requirement on VA loans, I believe, is a 580. They will go down to a 580. Now, that's going to be a pretty fun process, and I use fun sarcastically there.
Why is that?
There's going to be a lot more requirements. You're going to have to provide a lot more documentation. Once your credit score drops below 600, there's simply more things that you have to provide. Not only that, but your interest rate is going to be affected as well. The higher your credit score, the better interest rate you have. So even if you are VA eligible and you really want to buy a home, but you just aren't quite at that 600 mark, it would behoove you to take 6 months, build your credit a little bit. Getting you over that 600 mark is actually going to save you a lot more money in the long run because you're going to have a lower interest rate.
Now, I want to make a down payment, but don't have the money myself. You see, people can receive gifts and all those stuff, and they're all legal.
Yes, gift funds on just about all loan programs out there are permissible. So say you've got a great-grandmother who is willing to give you $5,000 to assist in your down payment. It doesn't even have to be just for down payment. Say you're buying a house and the sellers are not willing to cover closing costs. That's something that's very common. Most of the time, sellers are going to contribute a portion, if not all, of the closing costs for the buyer. Say this is not the case and the seller is just being a stickler and saying, no, we're not going to cover any closing costs. So you're like, okay, well, I qualify for this no down payment program, so that takes care of my down payment, but closing costs can be up to 3-4% of the purchase price. So that's still money that is going to come out of someone's pocket at closing. So say again, you've got the relative that is willing to gift you any amount of money, that can also be applied towards closing costs, as long as they state in what we call a gift letter that both parties sign, stating that the gift from one relative to another is not a personal loan, it is in fact a gift. Both parties sign it, and that is permissible.
So now, I have a question. What about for building a brand new house?
That would still be allowed. There are going to be costs associated with the home purchase process. So even if you're doing a no down payment program, and even if all of your closing costs are covered by either a relative through gift funds or through the seller, there's going to be expenses that you should prepare for. One being the home inspection. The VHDA does require a home inspection. Not all loan programs require a home buyer to have a home inspection, but I would never advise to skip on that part of the process. Home inspections run anywhere between $200 and $300, and that's going to give the buyer an opportunity to have a professional get in the crawl space, get in the attic, just go over the house with a fine-tooth comb and identify any big problems. Then you've got the appraisal. The appraisal determines the market value on that home. That's about $500.
And that's coming out of the buyer's pocket.
Yes, that is paid for by the buyer.
Okay.
So in addition to the appraisal and the home inspection, you've also got an earnest money deposit. Now that ranges anywhere between $500 and $1,000. If you're doing new construction, the builder would hold on to that earnest money deposit check until you close, and then you actually get that money back. So the earnest money deposit is initially money out of pocket, but that is the one thing that you do get back at closing.
So that also fall into the saving category of the person who's buy a house. You have to put all this into consideration in saving for all these expenses.
Correct. I tell people, if you don't have at least $1,000 or so to spend on the process alone, then you probably want to save a little bit more, wait a little bit longer to where you're not draining your entire savings account just to get the appraisal and inspection and earnest money deposit covered. But it is very possible after those expenses are dealt with, it is very possible, it happens all the time, to go to the closing table with no additional money out of pocket.
So now, for a home buyer who's sitting, a potential home buyer sitting at a home, and she has all this, worked out. She said, good credit. She wants all the do's and don'ts. She got all the stuff ready. She even have down payment. What's the next step?
The next step would, if that person, he or she has not gotten pre-approved, they would want to get pre-approved with a lender. So that means I would take a look at their credit, take a look at their bills, take a look at their income. They would submit an application, provide all the necessary documentation. Things that you're going to need to provide during the loan process are going to include tax returns, pay stubs, bank statements, copies of ID, proof of income that's outside of your job. So if you're receiving disability or Social Security, we typically ask for your Social Security benefit letter, something proving where that income is coming from. So once you provide all those documents to your lender, they give the stamp of approval, you're good to go. Typically, just a pre-approval gives you the go-ahead to go out and start shopping for a home. The pre-approval. You don't have to have every single piece of documentation submitted to your loan officer just to go out shopping. If everything that you stated on that application you can back with documentation, that's our go-ahead. We even state that in our pre-approval letter. It's contingent on receiving documentation. So the
pre-approval letter does it include the amount of the value of the house they can afford?
Yes. We would actually give you a max and say you are pre-approved for up to $200,000. So that lets the buyer know, okay, well, I need to be shopping in the $200,000 or less price range. A lot of times folks are actually pre-approved for more than what they feel they can afford. So many times I'll write a pre-approval letter and say, we could pre-approve you for up to $400,000 or $500,000. That's also going to give you a $3,000 mortgage payment, and they don't want that. They're not trying to be what we call house poor. So it's good to know what you can afford. We can break down different purchase prices and what kind of payment is associated at each purchase price and give you an idea of what you could expect so you know how to shop accordingly.
So when you say that you give them an idea of the monthly mortgage too, right? How much they can set a payment.
Right. We use estimates for taxes and insurance. Okay. Your mortgage payment is comprised of principal, interest, taxes, and insurance. All of that is rolled into one lump sum payment that you make each month. So depending on where they're shopping, I would look up tax information for that city or that county and see what the real estate tax rate is. If it's near the water, their estimate for insurance, homeowners insurance, is going to be a little bit higher. If it's further inland, it's typically going to be a little bit lower. And I try to give them as close to an accurate payment quote as I can each situation.
To my audience listening, as you can tell, she knows what she's talking about. I experienced it myself, and I encourage you. Again, I plead with you to give her a call. Next broadcast, she will give all information available for you guys to contact her. She's available to help you to become a homeowner.
Absolutely.
Even though you are being renting now, you can still own a house, and she will help you, walk with you along the way, overcome hurdles and bumps and all the stuff. She will answer your questions. She's there for you. So I encourage you to stay tuned next week's broadcast. I shall provide more information. And until then, God bless. Bye-bye.